Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Tuesday, December 6th. Jen Amos is off today. Stocks on Wall Street are set to build on yesterday's gains, despite a warning on the credit ratings of European debt. Standard & Poor's put the sovereign debt of 15 Eurozone countries on negative watch yesterday, which could result in a mass downgrade within the next few months. The warning included all 6 countries in the monetary union that currently have AAA ratings: Germany, France, Austria, Finland, the Netherlands, and Luxembourg. Greece was excluded from S&P's review because its rating has already been lowered to CC. The move may put pressure on European leaders to act quickly on steps to address the sovereign debt crisis when they meet for a summit this Thursday and Friday in Brussels. German Chancellor Angela Merkel and French President Nicolas Sarkozy are pushing for the enforcement of tougher budget rules and the ability to impose sanctions on countries that violate deficit limits. Investors are also hoping that a new fiscal pact would prompt the European Central Bank to move aggressively to buy the bonds of struggling nations. S&P's warning did put a damper on yesterday's rally in U.S. stocks, and today the major markets across Europe are modestly lower. But the move didn't come as much of a surprise. For that reason, the euro is already recovering some of the ground it lost yesterday. Right now it's trading right around 134 against the dollar. And U.S. Treasuries continue to fall, pushing the yield on the benchmark 10-year note up closer to 2.1%. Meanwhile, crude oil is holding steady at around $101 a barrel, and gold is dropping to around $1,720 an ounce. On the corporate front, we're likely to see some solid gains in shares of Dow component 3M. The company affirmed its earnings forecast for the full fiscal year and said it expects more profit growth next year. 3M is adding more than 1% in the pre-market. Lowe's may also open higher after affirming its own financial outlook. The home improvement retailer said that for the fiscal year ending February 3rd, total sales should rise by 2 to 3%. And finally, keep an eye on shares of AutoZone. The car retailer posted an 11% increase in its quarterly profit on a sales gain of more than 7%. The top and bottom line numbers both beat expectations. That's the latest from Weiss Research. I'll be back after the opening bell with all the market reaction.